Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. All eyes are on the nation's capital this Friday, November 17th. That's when the government's money runs out and the clock is ticking down on a deal to avert a looming government shutdown. Can Congress make a last minute deal? And how would a shutdown affect the markets? Joining me to discuss is Mark Hulbert of the Hulbert Financial Digest, and he's a regular contributor for Market Watch. Mark, thank you so much for chatting.
It's my pleasure. Thank you.
So, Mark, Friday night, will it or won't it? Will the government shut down?
Well, yeah, I of course have absolutely no idea. And what's the saying that when you make predictions, make sure that I forget how you put it. The hardest part about predictions is predicting the future or something like that. And this is a case in point.
What's your thoughts? What's your expectations? What's your come on? Give me kind of a prediction.
Well, I think they'll figure some way of pulling the rabbit out of the hat, but it really is not rabbit out of the hat because there's no magic. They're just going to kick the can down the road, which is what politicians of both parties have been doing for decades, or if not centuries. And I'm sure they'll do the same thing here, one way or the other. The only drama is how they're going to do it, whether they do it till January or February, will they do it in pieces, or will they do it all at once? But we all know that the government is not going to stay shut down forever. And that really is the more basic point, at least as far as the markets are concerned.
So part of all of that is Speaker Johnson's two-step package proposal to potentially prevent the shutdown. Can you talk to me about what's covered in that?
Well, I actually don't know the latest details, but I think it's a way of placating different parts of the coalition on his side, as well as trying to bring in as many Democrats to go ahead and make up for any deficit of Republicans who refuse to vote for it. It's a shrewd idea. I don't know that anyone really is being fooled by what's going on. So I don't really understand the politics of it. But then again, I've never claimed to understand the politics of how these things work on Capitol Hill. But I think the important thing is they're going to figure out some way eventually. It's just going to be too hard on the political fortunes, especially the Republican Party, to let it go completely with the government shut for weeks on end. They just wouldn't allow that. I think it would be too harmful to their own political prospects. So they'll figure out something, some way. And the only drama, as I said, is how they'll do it and how soon they'll do it. But we're going to have a government. It's not like they're going to completely shut it down.
And if it does come Friday night, what will life look like come Saturday the 18th?
Well, yeah. See, from the point of view of the markets, I mean, people think that I'm the opposite of a worrywart. I'm sort of a Pollyanna. I just don't think it's going to have that much of an impact on the market. And the reason I think that is the markets discount the future. I mean, if you look at corporate profits, a company's price earnings ratio, just to pick that one valuation ratio, is discounting 15, 20 years worth of earnings. And so it's really over the long term that a company's profitability will be either increased or decreased. And a government shutdown that lasts a week or two, even if it goes that long, even a month, is not going to have that much of an impact either on A, the profitability of different corporations, or B, the discounted value of a long stream of years of earnings into the future. And so it shouldn't, I say shouldn't because the markets aren't always rational, but if everyone is rational, it's not going to have that much of an impact on the discounted value, cash flow, or earnings of corporations for many years into the future. And so it ends up giving people like myself, I'm a commentator on this, so I love to write about this stuff, but I don't think it has that much long-term impact at all.
Well, reading some of your commentary, as you said, you've done a lot of research on this. And from what you found, it's actually that the markets react negatively before the possibility of a shutdown. If a shutdown happens, what we've seen in the past, they actually respond positively. Is that surprising? Do you think that's surprising for investors?
Well, it is and is not surprising. The part that's not surprising is that the markets hate uncertainty. So leading up to a government shutdown, there is the uncertainty, I suppose you could say, of how long it'll last and so forth. But once the actual shutdown occurs, I think people are already discounting that they're going to figure out some way of getting out of the mess. And so then they're focusing on something further down the road. It's an old saying on Wall Street that you buy the rumor or sell the news, or you sell the rumor and buy the news. And there's something like that going on. I mean, the other part that is surprising, and I suppose I shouldn't make too much of it, even though I wrote a column on it, but is that we just don't have that many examples in history of a government shutdown. You could say that's a good thing. But if you're a statistician trying to come up with a robust prediction that has statistical significance, you need many more examples in order to confidently say this is really the pattern. But the interesting thing is, insofar there is a pattern, it's that the market actually starts doing well when the shutdown occurs. So if you wanted to extrapolate from a sample size that's way too small, you'd say, well, the market would do well if the government does shut down on Friday night. I would never recommend that as a strategy, but it at a minimum suggests we shouldn't think that the market's going to fall off a cliff. And the other thing to say is, if you look at what the market's doing this week, the market's done very well this week, even in anticipation of a government shutdown. So it's so hard to try to draw any particular statistical pattern given that you have such a small sample.
Well, as you said, if the government, if politicians pull a rabbit out of the hat, the government doesn't shut down Friday night at midnight, then how do you think will the markets respond?
Well, I think it'll probably respond more or less the same way, even if the government were to shut down. So
Okay.
I just don't think there's going to be that much of a difference. It's a lot of drama. It gives us all something to talk about. Wall Street analysts need to come up with something new to write in their daily analyses they send to clients. If they were to focus on what I think they should be focusing on, they'd be focusing on the discounted value of 20 years worth of earnings. And that's boring because it doesn't change that much from day to day. So we, in the commentating business that I'm in, or at Wall Street Analysis, the game that they're in, we always are trying to come up with something new and interesting to write about, because that's what gives people the right to read what we write. But nonetheless, if I were to be totally rational about this, it doesn't affect the discounted value of future cash flows or earnings of corporate America, because we know that in the end, the government's going to run. There's just no possibility I can imagine that we will have no government. So given that, it's something that gives us something to talk about, but has not a lot of meaning. I'm thinking of a saying from, I think it was Dr. Spock in Star Trek. It said, a difference that makes no difference is not a difference. And if we try to interpret what that really means, is this is one of those things that I don't think makes a huge difference. Gives us something to talk about, but probably not a huge impact on the value of the stock market.
Well, I appreciate it because I get to kibitz with you. But again, going back to, if we do have a shutdown, aside from the markets, what risk does it impose on our already kind of fragile economy, aside from the markets?
Well, I do think it does have at least an indirect impact, which means that we are an ungovernable nation. I mean, I think we are in a totally paralyzed political system. I'm not trying to take any political sides by saying that. I mean, we've had problems on both sides of the aisle as we've tried to get stuff through Congress, and we're close to complete paralysis. And I think on the one hand, a lot of corporations think that's just fine, because corporations hate uncertainty. And if you know that nothing's going to change on the corporate front with either regulations or laws that might get passed, then you might say that's a good thing. And from a corporate point of view, from a very selfish point of view. But I think over the long term, we do want a government that functions. And I think that means having a Congress that can respond to situations as they arise. And so I think there's an indirect effect that's probably not good for the market, just because it means that we're unlikely to be able to respond to situations as they come up in the way that everyone would probably expect that we should be able to do. But given that, the short term, I think corporations say, hey, we know how to play the game given the rules of the game that have been set so far. It's unlikely that any of those rules of the game are going to get changed given the political structure and dynamics in Congress. So they, over the short term, they may say, we can learn how to live in that kind of environment. They probably will.
All right, Mark. Well, we'll be watching, because as we're speaking today, Tuesday, November 14th, this afternoon, there is a vote that's supposed to happen on Speaker Johnson's proposal. So we'll see what happens after that. And then we'll see what happens going forward. Wednesday, Thursday, Friday, we'll see. I'm just going to keep saying, we'll see with this shutdown.
Indeed, we will.
All right. Well, thank you so much for joining me. This is Industry Insights. I'm Meredith Heyman. We'll see you next time.